Good afternoon. Nobody can nap. I know after a meal, this is a dangerous time. So everybody grab a Diet Coke because this is going to be a great conversation. Welcome to town, Jewel.
Thank you so much. And thanks for the beautiful weather. This is like the best. I love it.
Right? It's like this all the time here. I don't know if they told you, but yes, every day, just like this. Well, we have a lot to talk about. I did sort of a deep dive on you. Some may call me a stalker. Others might, I just say journalist, similar. But one quote that really stood out to me that I wrote down was you saying you wanted to be the investor that you never had. There's a lot in that statement, and that kind of sums up all of the things. You wear all the hats. So let's kind of unpack that. Let's start with you as the founder and what that experience was like. Tell everyone a little bit about what you founded.
Yes. So first of all, thank you to Gru for having me. This is just amazing. So yes, I was a founder, and I founded a company back in 2012 in Atlanta, Georgia. And at that time, that was kind of a risky thing to do. Most people said if you're founding a startup, you have to go to Silicon Valley. But I was really headstrong about staying in Atlanta, building the company in Atlanta, because my customers were there. And the team that I wanted to build was in Atlanta. I built a company in the computer vision, deep learning space, and Georgia Tech just happens to have one of the best programs for engineering around that. And so for me, it made sense to keep my company in Atlanta, but that made fundraising pretty difficult because Atlanta didn't really have a built-out angel investing ecosystem, really not a lot of VCs in Atlanta, and definitely not a lot that were investing in 23-year-old Black women who are building computer vision technology startups. And so
go back just a little bit further even and talk about your inspiration, where you got the idea.
Sure. So I started my career at Google. And a couple years in, I was a little homesick and wanted to move back closer to my family. So my family's all in the South. You probably can hear a little bit of a Southern drawl. But I was born and raised in Nashville. And my grandfather actually has we have a family farm in Alabama. And he was in the middle of a harvest, and his tractor broke down. And he called me to help him find a part for it because at the time I had left Google and moved to Atlanta to work for a company called McMaster-Carr. So they're in the industrial parts space. And maybe you guys have heard of it. It's similar to a Grainger or a Fastenal, but they sell parts. So I was managing the call center. I was the person who got the escalations when customers got the wrong products. So basically, in my job, I got yelled at all day because people were upset that we had sent them out the wrong thing. And I figured there has to be a better way. And I kind of took my learnings from Google, which was you can use technology to solve big problems, and applied it to this sort of archaic problem space around industrial parts. And the solution that I came up with was take a picture of a part and use that as the mechanism for your search. And so this is back in 2012, where now we use, computer vision technology in a lot of ways. You may not know it, but when you deposit a check, that's computer vision. In 2012, it wasn't as prevalent. And so applying that technology into that problem space was a pretty good idea. And so started to build a team around that, build the technology around it, eventually quit my job at McMaster, go in full time, and just go after it.
Did you have a support system? Did you have a startup community to turn to? Did you know how to do that, how to build a team?
No. I had a support system. I always talk about when I came up with the idea, it was on 12/12/12. I'll never forget the date. I sent my mom an email telling her, I have this great idea. Will you support me in it? And basically, I was really asking her, if it doesn't work, can I move back home? And she said, yes, go for it. And I started to reach out to different people. I reached out to a former coworker from Google who had gone on to work at Shazam. And the way I wanted my technology to work was like Shazam. I wanted to be, you press a button, you get an answer, and it's like magic. And so I reached out to him. We started talking. Eventually, he became my co-founder. And then I started to go on Georgia Tech's campus. Like I said, I was really young. I was 23 at the time, so I still looked like I could fit in on a college campus. And so even though I wasn't a student there, I would go into different events, meet people, and one introduction led to another, and I was able to find really, really talented engineers who were looking for a real-world application for what they had done their PhDs on. And so I was able to attract like a world-class team to help me in building out the technology. And then I also met my first customers going to different events and telling, just giving them the idea, what if you had this technology that would allow your customers to locate their products with just an image? And so found my first customers that way. And so I think I kind of created my own ecosystem really with Georgia Tech as the anchor. And then just meeting people, talking to people, telling them about this idea, being an ambitious young person, and really just going for it.
What about the money? How quickly did you need money? How did you get money?
Yes, that was the hard part. Like I said, Atlanta, I think probably similar to how you all are just looking to start the angel investment community. At that time, the angel investment community in Atlanta was also pretty nascent. And I initially was pretty, I would say, reluctant to raise money. I knew that this was a big idea, but I knew that the technology was going to be really hard to get it to work. And so initially I put my own money in. I had really reframed how I was thinking about my job at the time. So I stayed at McMaster for enough time to save up about a year's worth of my living expenses. And then I also took out a personal loan and put my own money in at first to get the first prototype built.
I was going to say, did you take your mom up on that moving home thing?
I didn't quite get that. Now, there were times where it felt like I was almost there, but we made it work. But the other thing I often forget to share is that I actually went back to Google during this time and was working part pick during the day, Google also during the day, and on weekends and nights, and kind of just making it work. And again, that was in large part because personally, I wasn't quite ready to raise money. And then I also thought, I want to get this as far as I can on my own dime. And then I started doing pitch competitions as a way to get more money in as I realized, like, okay, this has some legs to it. And that helped me. I got to about $250,000 through pitch competitions. And then once I felt really good about where we were with the product, then I started to fundraise. So this is not until actually TechCrunch Disrupt, the big conference out in San Francisco, that was kind of the kickoff in 2014 to the fundraise. And that allowed me to meet people. The other thing is that I didn't really have a network of investors. I didn't know a lot of people that just had an extra 50 or 100K laying around that they wanted to.
Just wanted to give that to you. Yeah.
So I needed to figure out ways to build that network up. And so pitch competitions allowed me to do that, going to conferences, stalking people that I thought might be interested in what we were building. Those were the early ways that I was able to get in front of people. And then as we continued to develop the technology and it became more and more magical, I would put parts on the table, give someone my smartphone and tell them, take a picture and see what happens. Then it made it a lot easier when the product actually worked to raise some money.
That's amazing that you got it far enough that it was working. You had a working prototype. Yeah. So how was Part Pick received once you started really talking to heavy hitters, people who could fund it and get it to the next level? How was the startup received, and how were you received as a woman and a woman of color?
So this is the reason for that quote as far as becoming the investor that I wish I had, because it was a challenge. Investors that I was speaking to, they were having a hard time matching my identity with the product that I was building. So I would walk into meetings and people would be surprised that I was pitching this computer vision startup for industrial parks. That just did not match up for them. Mm-hmm. They were expecting me to be doing something, I don't know.
They wanted you in fashion, let's be honest. Yeah. And they wanted like a middle-aged guy with grease on his hands to be doing part pig.
Exactly, yes. So that was difficult because I was explaining there's no one in the world that has this experience of starting a career at Google and then going to work for McMaster-Carr. First of all, that's a really weird switch. But that gave me the insight to know that you can use technology to solve problems and then apply it to this old problem space. And so I had to try to help people understand, like, no, I came up with this idea. I built the team around it. We built technology that works, but people had a really hard time with that. And so that made fundraising really difficult. I was able to raise a seed round of 1.5, ended up a little over 2 million. But when it came to raise the next round, even though we had revenue, we were at $1 million in revenue. And at that time, that was kind of the marker for being able to raise a Series A. Even that was difficult. And so
I think it would get easier, not harder.
No. So it got harder, and ultimately I sold my business because I wasn't able to raise funding with reasonable terms. And so Amazon came knocking at the time when I was out raising the Series A, and I wasn't happy with what I was seeing from Series A investors. And Amazon was like, we want to buy it. And that was the hardest decision that I ever had to make because I knew that there was so much more we could do with the business and with the technology. I mean, even to this day, I still have my Part Pick email, and I still get outreach from companies that are like, where is this technology? We need it. We heard about you somewhere. So it's crazy. 5 years later, after selling it, the problem still exists in the market. Amazon, we went to Amazon, we changed it into a consumer product. And so now it lives in the Amazon mobile app, but the business case that we were solving is still a problem. So all that to say, you all are needed. And hopefully you can be that investor. But for me, I had this kind of chip on my shoulder when I sold the business because I knew that it could have gone much further. And obviously, it's always a great thing to be able to have the experience of taking the company from an idea all the way through acquisition and even further. I spent 3 years at Amazon integrating the technology into the mobile app. So going that full cycle, that is invaluable experience. But I knew that if I had investors who would go to bat for me and would understand that the vision was much bigger than where we were at that time and we needed more capital to continue to grow it, then that would have changed the game for me. So I decided when I was in the negotiation process and I was dealing with some difficult investors, I decided okay, when I get through with this, hopefully all goes well and the check clears and everything works out. The first thing I'm going to do is start to angel invest. And so maybe a few days after we signed the deal, I put out a post to say if there are any entrepreneurs who want to meet just to talk about what you're working on, let me know I'm available. And it was for me, I was really depressed actually in the sale process. And I needed a way to get myself back excited about, company building and industry and what people were working on. And so those breakfast meetings that I started to have with entrepreneurs was good for me because it got me out of bed and got me excited about learning about new industries since I'd been so heads down on the computer vision space for so long. And then it also allowed me to meet the first few companies that I angel invested in.
When you reflect on that whole experience now, what advice would the Jewel of today give the Jewel of then? And do you think now, with your experience as an investor, could you have done anything differently, or is that's the way it was then, and have things changed?
So things have definitely changed. And I go back and forth. Sometimes I'm like, I should have just kept pressing. I should have sold, my house or whatever. I should have kept trying to push forward. But then on the flip side, I'm like, everything happens for a reason. And if I hadn't sold my business at that time, had the financial event that I had, I wouldn't be able to be in a position now where I've angel invested in 14 Black-led companies. I've now invested through my fund in 22. I have, at Google, been able to get capital to over 200 businesses. So I think everything happened the way it was supposed to. But if I could tell myself, my 27 is how old I was when I sold the business, I think it would be, don't be sad. This is a great thing. Like, you should be happy about this. I was very much tied into the Silicon Valley narrative that if you don't have $1 billion exit, then that's not good enough. And that's not right. That's not correct. I mean, of course, we all want to have, a huge event like that, but just to reflect over the last 5 years of what's happened since I sold my business and the impact that we've been able to have, not just me, but everyone on my team from that event, I think, I should have been more in the moment of what was going on and realizing that it was actually an amazing thing that was happening.
Right. Quite an achievement that a lot of people would love to get to where you got to. So as you shifted into angel investing, did you know how to do that? And how did you approach it? What kinds of companies were you looking for?
I didn't necessarily know how. I just knew what my experience was as a founder, and I knew the type of investor that I wanted to be because I knew what I wanted when I was a founder. And so my approach in angel investing was to be very much geared toward finding great people and cultivating relationships with them, the founders, and being a partner to them as much as they would have me. And so that means, I have people that I've angel invested in that have really struggled with some of the mental health issues and things that I struggle with as a founder. And so I have paid for therapy. I've tried to connect them to resources that can help them from that standpoint. I love to do whiteboarding sessions and get in a room with them and try to work through problems. And those are some of the things that I wish investors would have even asked, like, how are you doing? Something simple like that, which a lot of my investors just didn't. And so it's definitely informed how I've approached investing, but I didn't really have a blueprint for it. It was more so a reaction to what I didn't want, and trying to just be the best partner that I can be for the founders that I've invested in.
We all have our own biases. We have our own perspective that we come from. You had the experience of not looking like what some people thought a person doing a part-related technology business should be. How did you make sure that you didn't bring your own biases when you started investing? How did you think about that, being in that role?
Yeah, so it's interesting because I do have a mandate, I guess you could say, as far as the investing that I make. I invest in my angel investments are primarily in Black women, and my investments through Collab Capital are in Black folks generally. Companies that have at least one Black founder is technically what it is. So that is a stance, but it's specific and it's intentional because I know what my experience was and I know the statistics. I know that Black founders are receiving less than 1% of all funding. And so I wanted to be specific about addressing that problem. But that's not the only cut of diversity and bias that one could have. And so I really think a lot about evaluating founders and companies based on, pretty much a standard rubric. I think about what is the problem set that this company is solving, and why is this founder the best person in the world, to solve this particular problem. I think about, not what's on their resume, but what is the distance that they've traveled in their life that can give me confidence that they can solve this particular problem and that they can go the distance because it's hard be a founder and to start a business, and especially today, it's even harder. When I say today, I mean like in this macroeconomic environment that we're in. It's founders are in for a tough next 12, 18, who knows, few months. And so I'm really interested in what is it that's going to keep this person in the trenches working on this thing. Is it that they had a unique experience that led them to this? You know, like I said, my experience was I really wanted to solve a problem for my grandfather. I saw a problem that my customers were experiencing. I had something that kept me in it day after day. And so I'm looking for that from founders as well. So I think having that standard kind of set of questions that I'm asking myself as I'm talking to founders and getting to know them allows me to make good decisions that are not based on, you know, my own experiences or whatever biases that I'm bringing into the situation.
You're here in Minneapolis, which is ground zero for some of the racial reckoning that's happened in the last couple of years. That was a topic of conversation this morning among investors and founders. There's been, I think, more attention, more headlines with those dismal statistics in the last couple of years than ever before. So there's this awareness piece happening, but is it translating into results? I'm curious what you think about that.
Yes. We will see. We've had some definite movement. You know, like I mentioned in my role at Google, I've been able to move a lot of capital in a short period of time with the tragic instance of George Floyd being a catalyst to being able to make a case for moving money that honestly we should have been able to move beforehand, but that was kind of what gave people some fire under them to move it. So I am still hoping that it doesn't stop. I think that the reality is we have an incredible racial wealth gap in this country that impacts funding, it impacts friends and family rounds, it impacts bias in the system, and it's a requirement that we all take the last 2 years and hopefully the heightened level of awareness that we have and ensure that any decisions that we've made don't stop because it's been time past. We still have a lot of work to do. And that's my mission, is to make sure that we keep pressing forward and we use this time that people are becoming more aware and they're understanding why is it that Black founders only receive 1% of funding. Well, there's some real systemic issues that we have to deal with. My hope is that we can continue to deal with these things.
Before we talk, I want to talk more about Google, but before we do that, let's talk about your investment fund a little bit. How did you go from being an angel to having your own venture fund? And I think you just hit a 1-year milestone. Mm-hmm. So talk a little bit about, you know, kind of the focus of that, how that experience has compared to being an angel.
Yeah, so I was meeting with people for breakfast, like I mentioned, this place in Atlanta called The Gathering Spot. And I realized maybe a few months in, I was like, all these founders are so good, and I only have so much money that I'm allocating to angel investing, and it's gonna run out pretty soon. So I have to do something bigger, because I was hearing stories that reminded me so much of mine, where they were building great technology, they were putting together teams, they were being so scrappy, and they just needed more money. And I was like, yeah, this angel investing is cool, I like it, but I have to do something on a wider scale. And now that I know, you know, what the whole journey looks like from idea to acquisition, I think that I am well positioned to raise a larger amount of capital to deploy. And I also knew that I had a unique seat of being basically having just amazing deal flow, because founders were reaching out to me because of my experience. So I was getting first look at a lot of great deals. And so I thought that I could put together a story around that. And it turned out that two of my friends were similarly situated, where they were coming out of their own experiences building businesses, and were looking for what can we do next to make sure that the road for the founders coming up behind us isn't as difficult as it was for us. And so we started to get together in 2018 to talk about what are we going to do next. And we finally, all of us were like, do we want to do a fund? We're kind of jumping around it, and we realized capital is the issue. It's where we need to put our focus. And so we decided to raise a fund in 2019. We started. And it took us about 18 months to raise it. We closed it last year, May 26th, and we raised $51 million. And we have deployed around 15 million into 22 companies. And
that's a pretty good first round. Can we take a minute? I mean, come on. I'm just a lowly journalist, but 50 million? I mean, that's great. Congratulations.
Thank you. Yeah. So, I mean, it's funny because when we initially started, when we initially came up with the idea for doing the fund and decided that we were going to do it, our first goal was 10 million. And then when we started meeting companies and kind of talking about the fact that we were going to have this fund, we got an overwhelming response and realized we need to go bigger. Because the problem is just, there's so much out there. I won't say problem, there's so much opportunity investing in Black founders in particular. And so we set out to do 50, and it was one of those like, that's a big goal, are we gonna get there? But once we kind of got started and got momentum, we got a lot of support from corporations, which was great. And yeah, we were able to close it. And now the best part is that we are finding incredible companies to invest in and really focusing on being partners to the companies. We all come from an entrepreneurship background, and so we really like to get in and work with the companies from an operational perspective, help them optimize everything that they're doing. And so it's really rewarding. I feel like I have the best job ever.
It's amazing. It's called Collab Capital. I'm not sure if we mentioned that. Are all of your investments in Atlanta or in the South?
No, we're investing across the country. We do love Atlanta, so we have about half the portfolio is based in Atlanta, and some companies weren't based in Atlanta and came to Atlanta because we believe that there's kind of a gravity, there's a pull in the city. So we do have a lot of investments in Atlanta, but we invest across the country. I don't think we have any here yet, but
we can fix that.
Hopefully you all will help
She's
me.
got a flight at what time? No.
Send me deals.
Let's talk a minute about Atlanta and that gravitational pull, and I think we've all heard of it. I was telling you earlier that, Minnesotans, we have a bit of an inferiority complex, even in a room like this with this much talent and power. And I think there's really a strong emphasis on building up our startup community and how much talent and creativity, and we've got the base of all of these great Fortune 500s here, and so much potential. Tell us a little bit about what the startup community is like in Atlanta, so we can try to emulate that, or see if maybe we're already there.
You're probably already there. I think you're already there. I think there's something to this idea of having an asset based approach, where you mentioned you all have a lot of corporations. That's a great asset. That's what most startup communities really need, is access to corporations, so getting them involved. You have a room full of people who are either already angel investors or interested in becoming angel investors. That's a huge asset. So how do you mobilize this group? I think that's what we've tried to do in Atlanta, is look at what we have, and instead of saying, we're the Silicon Valley of the South, I hate that. What are we? What do we have? What are we bringing to the table? And how can we bring these things together to make the community as good as it can be for the people here? So that would be my recommendation for you all, is just like, what do you have? You have great weather in May or June. So bringing people here, that's awesome.
We have a new Prince mural that's debuting tonight downtown.
Yes. I have to say, one thing I'm a little sad about, I really want to go to Paisley Park, and I don't think I'm going to have time, but you have princes from here. This is amazing.
Next time. You do have a 4-month-old at home,
Yes.
so congratulations on that, too, and keeping everything going.
Thank you.
When you talk about that kind of connection between the investment world and the corporations, there's somebody who you actually worked with who is very important to this community. She's right here. I see her in the audience, Mary Grove, who I know you overlapped with a little bit at Google.
Yes.
So talk a little bit about that and talk about what you're doing with Google for Startups.
Yes, you have a star in Mary Grove. People always ask me, like, are you Mary's predecessor in your Google for Startups role? And I'm like, I don't want to be. I can't fill those shoes. But am just honored at the opportunity. She built a really, really great foundation for the work that I do at Google. And now I know we have a mutual investment, so it's great to be co-investors as well. But to speak on some of the work that we do at Google for Startups, I have to say I'm actually still on maternity leave, so I may be a little bit dated. The team is doing amazing work without me, but what we've been focused on over the last 2 years since I've been in the role is really thinking about the gaps that exist across the country. So my remit is just for the US, and we look at particularly underrepresented founders, and for us, our work is focused on Black, Latinx, and military veteran founders and spouses. And so we do a lot of programming to get these founders prepared. We have something called the Founders Academy, where we put them through 6 months of pretty intensive training. We have accelerator programs, and the work that I'm most proud of is that we've been able to put together Founders Funds, which gives non-dilutive funding to early stage companies. And to me, it really looks like what friends and family funding, how that can be catalytic for founders, and typically is pretty friendly from the terms perspective. That's kind of what we've done with the Founders Funds. And so to date, we've done, we're on our 3rd Black Founders Fund, and we've deployed 15 million in the US, and that has gone, it's kind of taken off like wildfire. And there's been Black Founders Fund in Brazil, which you may not know, but Brazil actually has the highest concentration of Black people in the world. And so, but again, still the same disparity as far as funding there. So we've been able to do a Black Founders Fund in Brazil. We've done it in Europe. We've done it in Africa. Again, you wouldn't think, but Black founders in Africa also have difficulty getting access to capital. And so across the globe at this point, we've done Black Founders Funds. And then we've also launched this year a Latinx Founders Fund. And we also just announced a Ukraine Founders Fund. So the model that we created is now applicable to communities where there is need. And so really, really proud of that work. And the thing that I will say for this audience is if you go to Google for startups.com.
You could Google it.
Yeah,
right?
Google it. It's, like I said, I'm a little rusty. You can see the list of all the founders that we funded, and I think it's a great. Civic Eagle, I believe, is Minneapolis-based.
Yes.
They were one of our Black Founders Fund recipients. So you can see the full list, and it's a great place to find companies if you're looking to support and invest in Black, Latinx founders.
Do you find that once those companies are in that program or does it make it easier for them to get to that next round? Yes,
thank you for prompting that. We are now at the founders that we've funded have gone on to raise, I think the latest stat is close to, if not hit, $100 million in funding. And they state that the Google money was helpful to get them to, get to the more institutional funding. And so for us to deploy, 15 million and it turn into 100 million plus is amazing. And that's exactly what we wanted to do, is to say, hey, we're giving these companies a stamp of approval. We vetted them. They've worked with us. We have their back. And now other investors invest in them as well. So that's why I'm telling you guys to go on the website, find more companies so that we can get that number up. But, with all of this has just been, less than 2 years since we started it. So it's great that we've been able to see so many amazing companies and help them get more funding and more access.
When you're not on maternity leave, how do you divide your time? And is it just all pitches and decks all day? And does it all start to blur? Or, are there certain trends or patterns or key things that you look for?
Yes. All of my days and nights is dedicated to startups, and it's what I love. And so there is a little blurry of a line, but the great thing is Google's been really supportive of me doing both things. And I'm able to work with earlier stage founders with my Google for Startups work, and work with the founders that have gotten a little bit further with Collab Capital. But all of it is in the spirit of getting the right resources to founders when they need it the most.
Do you, and I know that you're focused on tech primarily, at least with Collab Capital, but are you seeing trends out there that might be useful to these investors here in the room to know about, or?
Yeah, I think we're in an interesting moment right now because there's so many huge problems in our world. And so the founders and the companies that get me excited are ones that are going after those big problems. I was at a conference last week and I heard from Secretary Pete Buttigieg, and he was talking about the infrastructure bill and how there's so much money in that bill, and it's ripe for startups to figure out what are the problems from thinking about infrastructure, thinking about climate change, thinking about some of these really gnarly problems that we really have to solve. Those are the founders, I think, that are going after those big things, and not just these incremental, one-offs, but what are the big problems that we can go after and solve? To me, that is what's interesting, and I think even more compelling for those problems to be solved in places like Minneapolis and places like Atlanta. I find that founders are typically more grounded in reality and like in the things that really matter in ecosystems like ours.
Amen to that, right, everybody? That's great. I want to make sure that we have a little time. I could keep asking you questions all day, but I want to open it up if people have questions for Jewel in the audience so that we make sure we get them in while we have her here. Anybody? Okay, well, I can keep going. Oh, I see one in the back.
Hey, Erin. I know her.
You know people in Minneapolis, besides Mary.
There we go.
Yes. I'm Erin Horn-McKinney, a fellow Black female founder, and super excited to have you here and talking to the audience here. The question that I had for you is, this is an ecosystem that, as you see even here, there's a lack of, I think maybe you and I are the only 3 Black women in the room, and we're trying to find ways to really engage more people, teach them how to be angel investors, especially people of color, because I think in even the information that was sent out about this event, we have more than, I can't remember the percentage of Minnesotans that make over $200,000 a year, right, and can be angel investors. So what are some things that you've been doing and thinking about to educate other Black women, people of color, about their ability to be angel investors?
Sure. So going back to what was mentioned as far as the corporations, I think that's a great place to start. And going to them, maybe doing lunch and learns, and telling them this is what it takes to be angel investors. Here are some local success stories. I mentioned Civic Eagle. I'm sure there are some other great companies that you can bring in. I think they were speaking here. You can bring in to talk to people and say, this is what the trajectory of our company has looked like, and this is what happens when you invest early. And this is how you can be helpful. Sometimes the pitch is not so much about them investing their dollars, but it may be about how can you leverage the experience that you have. Maybe you're an empty nester and you have some time on your hands and you want to get involved in the local community. A great way to do that is through angel investing, because your local businesses growing, homegrown businesses, that's it. That's a community asset. So those are some things that I would recommend doing and that I've done in Atlanta to get people off the bench and involved. Anytime I do a speaking engagement, I try to tell people how they can be a part of the ecosystem because it takes all of us to make it successful. And so, I would think about lunch and learns. I would think about even like church groups or, community organizations, just telling them, because a lot of people just don't know that you can invest at the early stage in companies. No one's ever told them about it. So I think it's important to get the word out in those various ways.
And we should say that Reed and Groove Capital have been doing a lot to that end too, and a lot of those kind of learning sessions, which are great. I know I saw another hand go up over here. Got a microphone on the way.
Thank you. I'm Diane Rucker, and I work within this ecosystem. It's really a pleasure to have you here. The question I have for you is, when we talk to startups that are maybe from the coasts versus startups from the middle of the region, the south, we hear from the coasts, I have a startup idea that's going to change the world. From the Midwest region, we tend to be too humble. I'm guessing the same for Atlanta and some of the startups that you work with. So how do you really evaluate these startups in the context of the region, the culture, or the geography that they come from? And how do you help them maybe see the potential of what they're doing that might be beyond the small problem they think they're solving and the potential for incredible growth?
That's an interesting question. I think, for me, something that helped me to see the bigger vision for myself and for my company was spending some time in Silicon Valley. And sometimes, I always laugh because I think about back to my early days at Google, and I would work with someone one day, and then they would quit and go and start a startup, and I would read about them in TechCrunch, and I would think, I was just working with that guy, and he's no smarter than me, So, but that gave me confidence because I knew from being in relationship and being in close proximity to people that were going off and doing great things that I too could do this and that I could have a big vision for what we were going to build. So something that we've done in Atlanta is actual trips, taking founders and investors out to different ecosystems for them to just experience it and see how people are talking about their businesses. Something that I got people talk to me about was like, the way you speak about your business is very factual. It's very much about what you all are doing today versus the big vision of where you're going to take it. And that was a learning that I had to learn. And I got exposure to people who were, maybe taking it a little bit too far as how they're talking about the business. But anyway, I think maybe doing some trips out to different ecosystems. And it doesn't have to be Silicon Valley. The hot spot right now is Miami. Everyone's talking about Miami and how there's a gravitational pull, if you will, there. But I think sometimes getting exposure and talking to people outside of your bubble can be helpful to founders. So that's something that, maybe would be a recommendation there. But then the other thing is there's parts of the Silicon Valley narrative that are not good and we don't want to replicate. And so thinking about, for example, right now, valuations are getting slashed and a lot of it should have never been where it was, right? So being a little bit more focused on building real businesses, focused on businesses that have unit economics that work and fundamentals that work. That is something that I think the middle of the country has always done a better job of. And so thinking about that as, again, an asset and how people are framing it as an asset versus, thinking of it as something that's negative, I think is another thing that I would recommend here.
Well, Silicon Valley is good for the streaming services because, some of the best shows on right now are all about all of these startups, right?
Yes.
Theranos, WeWork. Did you have a question? Mary, do you have a question?
Yes, one comment and one question. My name is Mary Grove. I'm with Bread and Butter Ventures. Jewel, it is such a wonderful pleasure to have you in Minnesota, and you're such an inspiration. And the way you have 10x or 100x the foundation of Google for Startups makes me so proud. My question for you is, you've worked with hundreds of startups at this point and invested in many first-time founders, founders who historically are underrepresented, don't have access to capital. I would love to hear your advice on the strategies for how you support them post-investment, and maybe a few, tactical specifics on what has really helped move the needle for them.
Sure. So the biggest thing that I've done, and I think is moving the needle, is not just focus on the capital piece, but also focus on the networks. So relationships and networks in business is almost, if not more valuable than the money. And what I found is that a lot of founders of color don't have a relative that they can call up that can get them connected to a person at the corporation that they're trying to sell into. And so one of the things that we've actually put into the design of Collab is that we partner our companies with someone who we call a growth partner. And that person is an industry expert, someone who has, a deep Rolodex in whatever field that they're in, that can make those phone calls on their behalf and make introductions to the customers that they want to get into. And that we've seen really helps take the capital a lot further, because they're able to close their customers on, customers that they were working to get into for a long period of time. They're able to get in with one phone call. So that is a big, important piece. And again, if you have corporations here, leveraging those relationships with the corporations for your companies, that's a big piece. The other that I'll just double down on is we have a mental health crisis in the founder community at this time. And so I've been really focused on getting access to mental health resources for our founders as well, because between COVID and just the pressures of being an early stage founder, I've had some really deep, dark conversations with a lot of the founders that I back. And so what we've done is we have backed up, particularly our Google for Startups work, and we're doing it with Collab as well. But we have a therapy group on retainer, and that we do subsidize therapy for our founders. And we've seen that has been a huge value add for them, because they're dealing with so much, not just the business, but their personal relationships, just keeping everything afloat. And so I would say the connections to industry experts, growth partners that we call them, that can make the process selling into corporations easier, has been a big thing. And the mental health piece has been a huge value add for our founders as well.
I think that was a great question to end on. Thank you, Mary, for that.
Thanks,
and thank
Mary.
you, Jewel, for all the amazing advice and inspiration. I think there's a lot that this group can certainly take away and build upon. So thank you for sharing your story.
Thank you so much.
Great to have you here.